Hi, this is Ron Janish with andrewscourse.com. Back in 2015, in the fall of 2015, I wrote this article and it was called The Green Line. It was rather whimsical. And unless you were a technical analyst that really understood the techniques that were discussed in there, which seemed almost silly to the average person, uh, you probably didn't get the power of this technique. And so what we're going to do is we're going to spend a little bit of time going into the technique itself and looking at some answers to a bunch of different questions. Questions like, does it work in different time frames? Does it still work today? Did it, after it was published, did it predict anything major? Let's take a look. And by the way, by the end of this video, you'll know how after the article was written, which was in about over here in terms of time, okay, that you would have been able to predict this down move here, okay, and just like you would have been able to, this was, what was this here? Oh, this was 2016 or 17. This is the S&P 500, and upon seeing this, you would have been able to predict this down move here, okay? So we're going to get into that. Before we do that, we're going to go over some quick basics. Okay, here's some basics. What normally a market goes up and down, okay? So it goes, and the theory is there's a trend that goes up and a trend that goes down. So let's see a nice easy example of this. If you have here, you have a 1, 2, 3, and down for 1, 2, 3, and now up for 1, 2, 3, and now down for 1, 2, 3, 4, 4. Well, let's try this again. 0, 1, 2, 3, 4, 5, 6, 7, and then up we go for a while. Now, notice that this, while these here you have higher highs than the previous high, right? Except when you're on these ABCs here in the middle, you have a rather odd pattern in here. And we'll call this the reverse point wave, or EP. And if you look online, you'll find something about the reverse point wave, and or expanded pivot formation. And notice that from this low here, prices went and made a higher high than the previous high pivot. And then, rather than just kind of going down and up here like they normally might, they went boom and made new lows. Okay, now here's what's interesting about this. Let's get rid of this drawing here first. Is that if you draw a pitchfork, good old Andrew's pitchfork, and by the way, he was a good friend of mine. So you draw your Andrew's pitchfork using 3 points, low, high, low, for example, and let's call these points A, B, C, and you find the midpoint of BC and draw a line from A through the midpoint of BC, and you get your median line. And these here are your parallel lines, what Andrews would call H's, and you can draw this for prices going up or for prices going down. Okay? Very simple. And we didn't go into this much detail in that article, The Green Line. Okay. And so you now have the detail. Now, what's interesting here is that if you take the high, low, high, notice that prices went down to the green, to this line here, which we will call the green line. This is, and you'll see why it's called the green line in a moment. That's another whimsical issue. So it went down here and reversed. Quite a reversal, right? And this is a very recent wheat chart. It's this is a real-time price that you see going up and down in the September wheat contract. Okay? And we're in the year 2018. And by the time we're done, you're going to see how you could have, using this information in here and in the article, predicted where the high was in the NASDAQ in 2015 very easily, and some of the other highs and lows. Okay, so here's a nice example of this. Here's a daily chart in the wheat. Okay, now some people asked, well, does this work on intraday? Well, yeah, it might. Here's a Russell 2000 index chart, and you know, just up and down and up and down and up and down. And let's look at this let's look at a 5-minute chart of this. Okay, now we can see here that we went up, down, here, now up, down, and now notice that this low here was lower than this guy, all right? And so if this goes and makes a new high, then we have an EP, all right? So we draw our low, high, low, and we see that prices went up to here, okay? And this is a 5-minute Russell chart. I do not recommend trading the 5-minute Russell chart or trading anything else like that. We do the research, and what we do is use some other systems that found to be incredibly reliable and also have a lot more indicators. So anyway, as you can see here, this one happened to go, actually put on a short position this morning at a price of 1689.90, which would be at about here. Okay. So the more that this goes down, the more profitable this gets. If this goes up above there, which it could theoretically real quick, then it becomes unprofitable real quick. Okay, so much for risk understanding. Now let's move on to what the green line is and how that works a little more. Okay, so let's go back to right here. This is a Dow Jones industrial chart. Now notice this line is green. Isn't that a coincidence, right? Actually, what happened was at the time I was using QCharts software, and QCharts software happened to put this line in green and this line in red and this line in blue. So I decided to call this green line. What the heck? Okay, now this is a quarterly chart of the Dow Jones Industrial Average, and this was up to the year 2014, July of 2014. Notice that prices are under the green line. So what happened was, and remember I did this analysis in the fall of 2015. And notice that, yeah, you can see here, this would have been September or so, and this would have been the middle or June, July. And notice what we did was we converted that quarterly chart into a weekly chart, and notice that prices went up to the green line and up to the green line, and this big line, green line here, is the exact same line that is up here, okay, on this big huge quarterly chart. Okay, so we can clearly see with 2020 hindsight that right here, which is a price of about 1850 or 60 or 1800 and something, it went down to here, which is a down move that's over 20%, and those are worth paying attention to. Okay, now, but you know, this was just the Dow Jones Industrials. Let's see if it worked anywhere else. Well, this was 2015, and we can see in Microsoft the high was at the green line, right? And notice that in each case, when I draw the green line, I always have one of these patterns in here. Okay, so here we can see prices went up to the green line, and let's see what this one was. This is Apple, and this was the high in May or April, May of 2015 in Apple, and this was the high in 2012 in Apple. Okay, and here was CBS. We all know good old CBS, and good old TV station, and prices went up the green line and found resistance, and down she went. Okay, so, but now let's go to the question of, has it worked since then in the big indices? We already saw an example that it's worked in wheat on a daily chart recently. We saw an example that it worked in a 15-minute chart today in the Russell Index. Let's see if it works in the bigger charts in 2015. Okay, well, or after that. And we can see here, this is the S&P 500, and this would have been probably in the year 2016 or so. And we can see that price, let's see, when is this? Yeah, this would have been the year 2016, and we can see that prices went up to the green line, and down she went for a while. All right? And we can see here, now this was, remember, the original article was published in 2015. Well, I wrote it in 2015. It's August, September, around there. And so one of the things I didn't cover was what was going to happen in the Qs, which is the NASDAQ index. Well, had you known about this technique, and you would have probably drawn the line for here, which found the nice little highs here towards the end of the year in 2015 in the NASDAQ. Isn't that cute? Right? Okay, and that's all she wrote. So that's the in-depth discussion on the green line. I hope it answers just the massive number of questions that it generated for us. We took the most interesting ones that would be most useful to you and presented them here. And let's press this button. And by the way, once again, I'm Ron Janish with andrewscourse1word.com. And what we have found is incredibly useful is being able to use stuff like this for artificial intelligence. Let me explain. Normally for artificial intelligence, what you do is you find 10,000 examples of something and you have it verified by an expert, and you put that in and then have the computer go and find a few of those in the future. Okay, and that's kind of interesting. That's one way. Now there is another way, and that is, what happened was over at MIT, they were looking for a way to find cancer early and find it more efficiently than spending zillions of dollars on MRIs and CAT scans. And so what they did was they developed a new technique, and we're using some of that for this. And what the result is that you don't need the 30,000 examples. You can do it with a whole lot less examples, hardly any actually, and do it incredibly well. So what we do is we have narrowed down the examples that are useful for some kind of artificial intelligence type software. And one of those that we actually use, by the way, is not the green line, but it's something else. And that's what we do. So you really don't need massive amount of big data with artificial intelligence in order to make this work. You can do this with a lot less data if you use the right techniques. So I thank you for your time. Ron Janish at Andrew's Course, signing off.